Right, guys, good afternoon. Hope you're doing okay. I just wanted to get a quick video out as promised to run through the gold group just to make sure obviously everyone's in the same sort of boat and knows what they're doing. Really hot start last week. Absolutely fantastic. Results were pouring in. I think there was a couple of things that people might have got a bit confused with in terms of like entry points and taking multiple positions, things like that. So I just wanted to cover all bases today very quickly. If there's anything that you feel like I've missed at the end of the session, please do reach out as well. But I've just tried to look at all the questions coming in and just try and sort of summarize everything that I've been asked. So, first things first, guys. This was a trade that was sent in last week, I think on Friday. And what you get, guys, is buy at between 3347 and 3345. So, this is the point at which you want to enter your position. If you look at the trade, you receive your position, you open it up, and the price is outside of this range, say it's at 3348.5. What you're going to want to do is skip the position. Okay, give it a couple of minutes, see if it drops back to within this price range. The reason for that, guys, is if you enter at a higher point on a buy trade, then your stop loss actually gets bigger in terms of the pips you're risking, and your target will get smaller. And ultimately, this will happen sometimes. It's a very fast paced market. And you need to understand, obviously, our gold trader, he will spot the trade, he will take it himself, he will tap it up, he will send it to you guys. You guys then receive it. You open up your apps, you tap it in. There can be maybe a 2 or 3 minute difference in that sometimes. And if you look at like how fast gold does move, I mean, this is a 3 minute difference here from 358 down to 3355. So 30 pips difference in 3 minutes. Sometimes it does do that, and it just, there's not really a huge amount you can do. If that's the case, skip it. Now, the good thing is, if TP1 is not achieved in the time that you obviously receive the trade, then it's still completely valid, and all you would need it to do would be to drop back down within this range, and then you're good to go. Now, the entry point is important, guys, because this determines how much you are risking on your position. So, say, for example, you got the worst of the two entries, you've got 3347, then what that means is you are risking 40 pips, because between 3343 and 3347, there is 40 pips difference. If you've got a lower entry, though, because obviously when you're buying, the lower the better, you are only going to be risking 20 pips, because between 3345 and 3343 is just 20 pips. Okay, so obviously if you can get your entry bang on, if you can get the best possible entry, it means your TP is going to be higher because there's a bigger distance away from the starting point, and also the stop loss is going to be smaller. And obviously the better the entry, the higher the stake you can use, because ultimately the risk is going to be lower. Now, I had a lot of questions coming in saying, what should I do? Should I be taking all three trades? Should I be taking just one position? And again, guys, it does really depend on what your own sort of risk tolerance is. I think when you are taking multiple positions, what you do is put in TP1, TP2, TP3. I would leave the open TP unless you are, fully accustomed to taking your own positions. I know some of you guys are now basically trading full time. I know a lot of you do trade gold in your own right. In which case, we can, update you what the open TP will be. But for those of you that are new, for those of us that maybe don't trade gold as much, three TPs is absolutely fine. So what you do is you can either take three individual positions at a lower stake than you normally would, because ultimately it's three times the risk, and then have take profit one as the first target. If that gets hit, then you will have two more trades running in profit, because obviously that one's, you've taken it at basically the same entry. So what a lot of people will do is once TP1 is achieved, you can adjust your stop loss to the break even point. Now, there are pros and cons to doing this. The pro is that it essentially protects your capital. It means that you've banked the first take profit, and TP2 and TP3 will be in profit at that point. But if it goes against us and drops all the way down to the initial stop loss, you are not going to incur that loss because you've adjusted it to your entry point. The con is that sometimes it will drop down to your break even point and then fly all the way back up into profit, in which case you've then missed out on the profits itself. So, what I would actually start suggesting, guys, is if you have three positions open, TP1 gets achieved, that gets rid of one, so you've only got two. It might not be a bad shout, depending on your entry, to make one of the trades risk free, and that way you only really have the exposure for one position, if that makes sense. So in an ideal world, TP1 will be hit, TP2 will be hit, and then TP3 will be hit, shortly after. In which case, all of your targets have been met, and you're essentially making, 2.5 times what you would be on just one position. Now, when you do make it risk-free, guys, it's important to make sure that your entry is within the range, because if you took a position at, say, 3348.5 and then you made it risk-free, the problem is, to TP1, it's only 15 pips, so you're only really going to have 15 pips worth of breathing room, in which case you're likely going to be stopped out. Okay, so do use your sort of, your common sense. If you've got the best possible entry, so you went out at 3345, and then it hits TP1, you've essentially got 50 pips worth of breathing room, if that makes sense, which should, for the most part, be comfortable. Okay, but if you run all three positions, one's closed, one's risk free, and then one is running just as normal. That way, even if it does drop down to the break even point and tap the other one out, you will still have the third position open and active, if that makes sense. So again, I know it's a little bit confusing, and if you want me to potentially do like a live call when the market's actually open, we can potentially play around and do some live, then I will do that as well. But I think it's just important, guys, to try and strike a balance between trying to maximize your profits, but also not having a load of just open positions, which if it goes the other way, is going to mean three times as much loss as as you really want. But I think last week we hit TP1 on about 90% of the positions put out. So yeah, really good start as I say, and hopefully plenty more to come. Now, if you're only wanting to do one position per signal, again, you can do that. It's ultimately your choice. What I would normally suggest would be to put in TP2 as your starting take profit. Once we update you that TP1 has been achieved, that is when you can consider making TP2 TP3 and adjusting your stop to either break even, or if it does hit TP2, you can maybe even move it into a guaranteed profit level. So change it to 3,350, and that way you are guaranteeing 30 pips or 50 pips from your starting point. Okay, but it's one of those guys where gold, as I said, it's so fast moving that even if you do have to skip a trade, if you can't get the entry bang on, there's going to be another trade coming right around the corner. And I think that's the beauty of it. Unlike the sort of regular slow and steady trades that we do in the VIP, if you miss a trade in the VIP, you might have to wait another day till the next one's come. Whereas with gold, there's probably going to be one in half an hour's time anyway. And I do think that takes the pressure off. You know what I mean? It means that if you miss a position, say we do 10 positions in a day, if you miss two or three of them, you can still be seeing profits. Nonetheless. But that's basically it, guys. I mean, your stop loss, obviously, size depends on your entry point, and then what you need to do is make sure your lot size is suitable. So, if you've got a £500 account, I don't want anyone trading ridiculous stakes. Especially if you're taking multiple positions. Think about what you would normally do on a regular day trading position with us, and then if you're doing three positions, try and divide it by three. So, if you're trading at 0.3 overall, just do three trades at 0.1 instead. If you're trading at 0.06, then just do three trades at 0.02, etc. What you're trying to do is make sure that you're getting the same overall risk that you're normally used to, without it being a massive issue if it goes the other way. But if there's any questions, guys, anything anyone's not sure on, please do let me know. I was going to run a live call today, but I'm thinking obviously where the market's not actually open and moving, it might make more sense if we do that on either Monday or Tuesday. So if you do fancy coming to check that out, and we can obviously do it in a live environment where there might actually potentially be trades active and open for us. I think that would be not be a bad shout. But yeah, just to summarize, entry point, very important. Take profit one, take profit two, take profit three. If you're taking multiple trades, then obviously do make sure that you are protecting your capital. For the stop loss, it will vary. Sometimes it'll be 50 pips. It might be as high as 100 pips. And if that is the case, then what you do is you bump your stakes right down. And obviously to work out exactly how many pips you are risking, work out what your entry is, and then look at the difference. Okay, between 3347 and 3343 is 40 pips, but it's only 20 pips from 3345. So depending on what your entry is, your risk to reward can go slightly higher or slightly lower. Okay, nice and guys. Looking forward to Monday though. Plenty more blues to come in. Apologies about the lack of trades in the VIP this week, as it was just a bit of a nightmare week for me in terms of what I was doing. But looking forward to a nice busy week across the board, and I'm sure plenty of blues to come. Nice and guys. Have a great weekend. Catch up soon.